Welcome to this week's video where I discuss what I believe is important for individual investors to consider over the next 5 to 10 business days. We're going to talk about the new COVID variant, how that's affecting the stock market, and should investors try to take advantage of this situation. We're going to speak a little bit about the Fed. Will they start to take away stimulus a little quicker than they first anticipated? And lastly, market timing. Whenever we see volatility in the market, investors can help themselves, but trying to time markets, get in and get out in certain situations. So is market timing ever a good strategy? Stay tuned. In our last video, we discussed COVID-19 and the effects that it could have on individuals during the winter months. I spoke about if we did see a rise in cases and this caused the market to pull back, that I felt this could be a great buying opportunity. Well, little did I know that we would have a new COVID variant, Omicron, and this would definitely take the markets down by quite a bit. My philosophy hasn't changed. I do believe, even with this COVID or this new COVID variant, that we would have a great opportunity to buy into this market. I believe this market will continue to move higher, even in the face of COVID-19, because we're continuously seeing demand and a strong economy. So going forward, if this new COVID variant does cause some disturbance, some volatility, I would look at this as a buying opportunity. Look for some good quality investments and buy on the dips. Recently, the Federal Reserve spoke in front of Congress, and what they indicated was that they felt they could further enhance or increase tapering over the coming months. What does that mean? Well, that means the removal of stimulus even quicker than they first had anticipated. What does that mean for the markets? Well, the markets tend to get a little bit jittery when the Federal Reserve starts to speak about removing stimulus. As many of us know, after stimulus is fully removed, what comes next usually are higher interest rates. However, I've always maintained in my videos, on TV and on radio, that both the stock market and interest rates can rise at the same time. It's not until we see interest rates much higher will the stock market start to be a little bit more volatile. We will continue to see some volatility, but overall, I think any volatility due to initially higher interest rates, once again, could be a good buying opportunity for individual investors. So going forward, let's not get so concerned about interest rates rising. I think we have a pretty long runway before it should really start to affect stock market performance. Trying to time the markets. It's something I speak about on a regular basis, and I always say trying to time the markets is a foolish game. Yet, individual investors cannot help themselves. When markets are quite volatile, individual investors will always ask me the same question. Should I buy in now? Should I wait a little longer? Maybe the stock market will drop even further. What is the correct strategy? I always maintain that if you have money to invest, you go out and you find the best quality investments you can at that time. Nobody has that crystal ball to be able to know, will the markets be higher a month from now? Will they be lower a month from now? All we can do is continue to buy good quality names at cheap prices, because we do know that if we do see further sell-off in the market, the names that are on sale that we would be buying have less to fall than those names that are very, very expensive today. So going forward, it doesn't matter if the market's going to go up or down in the short term. You need to continue to buy good quality names. Let the market do what it will do. But over the long term, buying good quality names, and if they can pay you a great dividend, has always been the best recipe for success.